last night I was talking to my son because he's home visiting because they had like the airline shut down. They canceled a bunch of flights because of this government shutdown that's happening, which they look like they're getting through it now. And he and I were talking. I was like, this is why I've always told my kids this. Your job is really to put yourself in a situation where you can weather any economic storm. Like nothing should be able to tear you down. Government shutdowns, economic failures, black swan events like COVID, the market crashes, you lose employment, your business gets shut down, half of your businesses get lopped off because of tariffs. Like all of that should just be confirmation. Like you shouldn't be looking at this like, oh, this is a problem. You should be looking at this like, no, this is confirmation. If you're not doing something, you need to be doing something. This will always happen. And as it goes, it's going to get harder. It doesn't get easier as you go. It gets harder as you go. And the more you have, the more you have to continue to do because you want to put yourself in a position not to just play this game, but to win this game. Because Wall Street has the money game on lock. That's why I was like, okay, cool. When we moved and we sold all of our real estate in Hawaii, I was like, I'm going to put myself and my family in a situation where we create a big enough ship where we can weather any economic storm over the next decade or longer. I'm going to live this life and I'm going to continue to press, which is why we're like, hey, what are the big guys doing? I started studying big companies that had what I wanted, like Blackstone, they raised capital, KKR raises capital, Goldman Sachs raises capital, JP Morgan raises cap. Every one of these guys, the giants on Wall Street, these banks, Wells Fargo, all like Bank of America, life insurance, they all raise capital. They all raise money. They take money in, they reinvest that capital, they allocate capital into real assets, and then that real asset pays them, and then they go off and they manage those assets for their customers, which are hint KK like AKA their actual investors. So that's what I wanted to do. I was like, okay, well, cool. How do we make sure we build a big enough ship? We create our own economy. Let's go out to my friends on Facebook, Instagram, YouTube, and let's talk to them and say, hey, I'm going to go off and we're going to raise a real estate fund. We're going to buy the best assets in the best locations. We're going to buy the same assets. I'm going to compete with Blackstone, Goldman Sachs, Madison National Life, New York Life, all the big boys. I want to compete with banks and I want to do this with you instead of going to them and making them wealthier, right? But the bigger picture here was being able to talk to my friends and stuff, you guys basically, and say, look, guys, focus on continuing to grow your income, grow your revenue. Whether you have a great business and you're making a lot of money, excuse me, making a lot of money in your business, or you're a high paid employee, you make a lot of money at your job, and you got a lot of money sitting in a 401k, an IRA, and it's just sitting there earning you nothing. The bank is using your money, Wall Street's using your money. You're not making a bunch of money. You're hoping and praying this works. And when you have stuff like this should be confirmation. There should be what is that called? When you time travel, you should be able to look into the future and go, okay, if this continues to happen, what happens to me? What happens to my kids? What happens to my mom, my dad? What happens to my grandkids? What happens to my grandkids' if I don't do something because I know better? They don't. They're not even here yet. It's important for you to make those distinctions. So, number one, if you're a high paid earner, high net worth person, you got a great business, or you're a professional, you make a lot of money. Number one, yes, you got earning money licked, but next you need to focus on keeping it. How do you keep it? You can't keep your money with stuff like this is happening, right? The banks tell you that your job is to like save money or go buy a house or go get a loan or go get a mortgage. Those are bank products. They're making money off your money. You aren't making money off your money. It should be a crime because ultimately, let's say they lend your money out at 7 or 8%. They're turning around and giving you 0.002%. Or let's say that you're a big dog and they're giving you 4. They're still making 12, 15, 20% on your money. And that's you're not even keeping up with inflation when you do that. And you're hoping later that it's there for you. See, they're talking about airlines because, like I said, that's what's going on in the world right now. But the other piece of this is you need to learn how to multiply it. So if you're going to you trust Wells Fargo more than you trust yourself to make a decision with your future. You trust Bank of America, you trust Merrill Lynch, you trust Fidelity, Vanguard, all these other people with your money, BlackRock. You should probably take a look at, hey, where do I want my family's money to be? Because you don't want your kids and your grandkids to deal with the shit that's going on in the past. Or let's say you're going to take care of your family, right? You want to make sure that you have done what you need to do with your business to invest that money in a real asset. Real assets aren't taking the hammer of this. It looks like they are, but they're not. Whenever they talk about real estate on CNBC, they're talking about single family houses. They're talking about their product, not yours, not your investment. Your single family house, your home is not an investment. You want to guess that? if you go try to register with the SEC as an accredited investor and you put your primary residence on there as an asset, they'll say no. As a matter of fact, to be accredited, they say you have to make 200,000 a year or more last year, and you know you're going to do it again, or you have a combined household income of 300 grand, or you have $1 million net worth. You don't need all of them. Let's say you have $1 million net worth, right? Stocks, mutual funds, bonds, second home or whatever. Now you can add that too, but you have to have that. If you just use your primary residence and say, yeah, this is an asset, they're gonna be like, it's not. Right? That's the reality of it because they tell the public one thing, they tell you one thing, and then they do something else. That's how this game is rigged. That's why the money game is rigged. It's been rigged for thousands of years. But now is the time that we can see that. So, multiplying your money, you need to put your money in a place, move your money out of the banks into an asset that pays you. Number one, it pays you cash flow. It protects your capital. You got the possibility of future appreciation, right? And then you get the tax benefits of being in that asset so you can keep more of what you make, which is the second thing. Earn it, keep it, multiply it. So if you're investing in a real asset, number one, I would say invest in real estate. I'm a real estate guy. That's my first go-to. I understand it. I love real estate. It makes, well, I don't love real estate. I love what it can do for me and my investors. That makes more sense to me. Or you can invest in your own business. But here's the deal. You don't need two businesses. If you're busting your ass in your business, you invest back in your business, you may or may not make that money back. And you got to work for it. You don't need two things. Just take your money, all of your money, dump it into a real estate, and then focus on your money, right? Like Warren Buffett said, put all your eggs in one basket and then watch that basket. Like so, if your business is your basket, watch the basket, but take the eggs that you had, invest it, and then turn around and watch that basket. Why? Because you got to. It's your panic mode. You got to hustle now, right? You got to keep doing what was working. So when I see this, man, it makes me I want to sit down with everybody, and this may have been all over the place because I'm kind of fired up about it. But the point of this is this: when you watch what's happening out there, let this be a future thing for you to be able to say, dude, what can go wrong and how can I fix it? This happens again. This happens every 10 years, guys. This isn't new. The debt market goes crazy, inflation goes away, the Fed steps in and they crank down on interest rates to start raising them. The government prints a bunch of money, pumps it back out, like you saw that. President Trump's getting ready to send out another stimulus check, which is coming from tariffs. $2,000 back into the world. What is that going to do? People are going to dump their money back on stupid shit. And then the price of goods are going to continue to go up. So that 2.8, 2.6, below 3% inflation rate that they're trying to hedge for right now to make sure it doesn't go up. What do you think is going to happen to cost of goods? It's going to go up. Why? Because $2,000 is going into every household or going into all the households who need it or don't need it, but it's not like they're going to take it and put it away. They're not going to turn around and reinvest that money. They're going to dump that money into stuff they don't need, just like last time. That's just kind of how it is. They're stimulating the economy to get them to start spending money by seeding it, right? And if you don't believe me, when we had a gym, some of the athletes and wrestlers and stuff like that would go out and they would do these donation stuff. They would stand outside the road, hey, let me wash your car, let me do a bunch of stuff. A lot of them had a net. We learned by paying attention, like who would give. You always put a little bit in the net first because then people are like, oh, there's money in there already. Let me put some more in there. That's how you do it. You give somebody something, and they're like, once they receive, they're like, oh, they're going to want to cope. If I give you something to spend, you're going to probably turn around and spend more. That's all that this is, guys. But if you know that, then you can play the game better. So if you get something back, I'm not saying it's wrong to get, but once you don't go give it. Get it. Like I said, earn it. Or you didn't earn this one, or it's a part of earning because it was your money anyway. So they're giving that money back to you. Now you're going to take that money and you're going to either keep it or you're going to reinvest that money. But do it for your family. Do it in something that you get a gain from, not just give. All right. So again, what could you do? You can invest it in yourself, skills, something that you learn that makes you better, financially better. Like keep your financial targets in mind. Next, you can reinvest money in your own business. 2 grand is not going to help your business as much, but it will. Maybe it's marketing, maybe it's this. But if you're a big shot and you're bringing in like $5 million of revenue a year, 10 million revenue a year, 1,500,000, or you're a doctor, you're a dentist or something like that, and you have a practice or you're a financial advisor, an attorney, you have high income, it's not going to affect you that much. But what you can do with that is you can say, okay, where am I not investing so I can make sure this doesn't happen? What if I want to sell my practice? One of my buddies is in the process of buying accounting firms, exiting another practice. That's huge. But what does he do? He also invests in real estate. His real estate is continuing to grow while he continues to press on his businesses, and his businesses make a lot of money, man. I'm telling you, if you are in a business, the financial sector is going to continue to grow. That is where businesses are going to grow. That's my opinion. It's AI, yes, but AI is going to make a lot of things that were manually done in the accounting space, the attorney space, documentation space. All that stuff's going to get big. Real estate is always going to be the party hound. People are going to dump their money in institutional quality assets over the next 2, 3 years. And if you miss this door, you're going to miss it. You will not be able to take advantage of the trillions of dollars worth of benefits that are going to come about in the multifamily space if you aren't paying attention to where you multiply your money and where you invest it. So it's either you, your business, or it's going to be real estate. That's where you're going to want to look at. So I appreciate it. Boom. Do your thing today. Like this video, share the video, comment on the video. Like I said, this should be a warning for anybody, not the cat food stuff behind me. But the fact that the government shut down, the fact that flights are getting canceled, the fact that they couldn't come to an agreement about what they say is for you, that also affected a bunch of people. If you're a business owner, you're a person that's out there grinding and producing and taking care of your family, you should put yourself in a situation where whatever somebody else does to you doesn't affect you at all, right? At all. And your generations forward of you. Create generational wealth for you and your family by investing. All right. So let's get this stuff done. Let me know if you need anything. Have a great day today. Boom.